Good day. Ira Epstein of Linn Associates with your agriculture wrap-up for this Tuesday, the 24th of September, 2019. And we're right now getting on to 3:30 in the afternoon. Now, by now, you've probably heard about the crazy game going on and the timing of it in Washington, D.C., where by the time I'm finished recording this, we may have heard that Nancy Pelosi has given in to fellow Democrats and has begun an impeachment inquiry. At the same time, the president has said that he is giving the full, unredacted transcript of his conversation with Ukraine's president to the press and to everybody tomorrow for them all to read. Think of this as a game of poker. Everybody's in. This is the all-in event, and we'll see just how this is going to play out. The sadness is, and I feel this is terrible, here we are on the stage of the UN, all the major world leaders are in America, and we look unbelievably out of control amongst ourselves. Shame on us. In looking at, by the way, you could have done the timing of this 2 weeks from now, a week from now. What's the big deal here? In taking a look at the grains, you're trying to get a little bit of a bid in corn. I saw that Taiwan, because we're in Illinois, and they put out a notice today, they have signed a deal with Illinois for 5 million metric tons of soybeans. That's away from mainland China's purchase. That's a nice little amount. As you look at energies, they're sinking today. As we look at all that's going on in the marketplace, and we can come over to the dollar, a bit lower against stronger currencies, and given all the craziness, the stock market, while it's down, isn't in a crashing mode. You know, you could be at an impeachment level right away here. We don't know, and that can't be friendly to the stock market. Looking at the weekly area chart of soybeans, we're reaching up into this resistance zone that comes in against that 904, 905 level. On the chart, you can see you're crawling back up into this level of resistance. The swing line still has a pattern of higher lows, but it has lower highs. Now, what gives the market a temporary oomph to the upside is going to be taking out this high of yesterday at 899 and a quarter, because for the moment at least, if that occurs, you'd have higher lows and a higher high. That doesn't mean you can't end up with a reversal the other way and change the chart picture, but for the moment that would be a positive. Not getting up and over that, well, then you've got to be concerned if you get under this low, because getting back under the 880 and a half level, a problem. Where's the battleground? Well, I think it showed up correctly, as I said, at the 100-day moving average of closes in green. Today's the first day away from it. It is an inside day. We didn't take out yesterday's, that's Monday's, highs or lows. The resistance is back up at 908 and 3/4, which is back up into this level here. And that's certainly going to be pretty if you're bullish in the market. And the negative is that you close under 879 and 3/4 and don't take this number out. You can end up with lower highs, lower lows. That's where I see the picture having shaped up. In terms of momentum, you remain overbought. Any reading in the momentum indicator called slow stochastics that is over 70, but both numbers not going sideways over 80, is overbought. And that's how I look at this. So I see a market that's in an uptrend. The bias is up. We are overbought. We had hit some resistance back here and haven't really gone anywhere since then. In the meal market, you've made a lower low yesterday with an outside day up, and today the market went back to the upper Bollinger Band and ran out of momentum. It got to 302.10. The high of the Bollinger Band was 301.90, and you could see the market stalled out at that number and closed barely higher on the day, 299.50. Again, I think that when you get into this pattern, it's a problem. Now, there's a slight difference in it. You know, we were hitting the lows back here, and then we got to the high. We haven't come back to a low Bollinger Band, but you're hitting the highs, and momentum is up. The trend is not up. You've hit a resistance point, and you're a bit stalled. In the soybean oil, once we began this correction and the momentum started down, you put into play the possibility that you get back to this 18-day average to regroup. You don't have to, but if you take a look, that's pretty much what happened. You got right under it today, and boom, you closed higher on the day after getting to that number of 29.19, you closed 29.33. In the corn market, you've had a pattern of higher lows now. Will you get to the upper Bollinger Band? We haven't. We haven't hit that upper Bollinger Band. I can go all the way back into July when we had that terrible weather. Will we be able to get up to it again? The interesting part is this is happening as harvest is just beginning. We're not far along. And you've got to be concerned with delayed planting. What does it mean for an early frost and how much of the corn would be their growth stunted at that point? I know that already it's happening because when I leave the office now, by the time I get home, it's on the dark side. So it used to be, boy, it was beautiful. You'd walk through the loop in Chicago and you do all that. But when it gets darker, I don't feel like doing that. You can see how the market, the higher high area, overbought. Wheat, reversal. Got through this important low. Now you have a neutral market. You got higher highs, lower lows, making a run for the for the 18-day average, where it probably is going to regroup, and it lost its embedded reading. So the target's the 18-day average. It seems to all be happening at one time. In the sugar, I've changed gears on you. I'm now in the March sugar. I told you the open interest and volume was moving. You've had a period coming into today of higher lows, higher highs over the 18-day average, momentum pointing up. It puts into play the possibility of the resistance of the upper Bollinger Band, and that's where the market went to today. It did close 2 points over it, which doesn't prove much. And if you look at the number, the red number, it is now over 70. So you're overbought. You've hit an upside target. I think some smart money might be taking something off the table. If the market wants to run further, then the 100-day average becomes a potential resistance. In the coffee market, this all became now interesting. We had the question of the market running into resistance at the point of the 100-day average in green in the upper Bollinger Band. Remember, the black dashed lines are Bollinger Bands, whereby it's an algorithm designed to keep the market trading within it 95% of the time. You don't want it to be 100%. Why put it on the chart? It's never going to be out of it. You want it to be able to get out of it so you can measure, is it getting overbought, oversold, stronger, weaker, what's it doing? Well, the combination often, I'm never going to use the word always because chart patterns don't work that way, but the combination of the first challenge of a 100-day average and a Bollinger Band are often an area where the smart money says, maybe this is a spot you take something off. Then what I call the line in the sand, the neutral point on a chart, is the 18-day average of closes. Now on this chart, if this market were to get up over 190 and not take out 98.05 in the process, you could easily end up with higher lows, higher highs, back into an uptrend, in other words, with a challenge of the 102.60, the 100-day average. If the market can close underneath, and it closed today at 99.15, so it's in a downtrend by closing under that until the 190 is taken out. If the market exceeds this 98.05, you could put back into play a challenge of the recent lows. I don't know that that's in the cards, but that's how I'm reading the chart. In the cocoa market, you still have an embedded reading, but it's losing its power. You can see how the red line is starting to drift on you. Now, the first time it closes under 80 is often a sign that the market is through with that phase of the market and it's ready to retreat. In this case, I say retreat because it's up over the 100 and the 18-day average of closes. And the first number I'd look for support would be the 100-day average on the way back down. In the cotton market, you've reached neutrality again, but the trend is up. You've had this pattern of higher lows, higher highs. Now, yesterday, you had an outside day up. If you take out the low of an outside day up, I look for the closest of a main moving average under the market to be hit. That would, in this case, be the 18-day average. Take a look. You hit it, and you came right back and snapped. So you haven't done any damage, is what I'm saying, to the overall trend, but there is divergence. You can see momentum is pointing down, the bias is up, and the trend is up. We have a divergence point, and it might be a battleground right here at that 18-day average of closes. In the cattle market, yesterday you went to the upper Bollinger Band, hit it. Today you went and pushed on it again. You have an embedded reading. Now, embedded occurs when the oscillator of momentum, the slow stochastic, puts both the numbers that make it up. They're called a K and a D line. The real difference in the math of them is one uses on a daily chart 3 days worth of value. the other, the D, 5 days. That's the whole difference, same formula. It's like moving averages crossing each other. Well, when they both get over 80 until the red line closes back under the 80 level, and I'm assuming they do it several days in a row, which today was it, that means the market has converted from overbought to locking in a bull trend, and on breaks, I'd expect to see good buying in that market. You don't start looking at the swing line anymore, you start just focusing on momentum. In the feeders, you're doing the same thing, pushing on that number. Now on pullbacks, I would look for the 100-day average to try to offer some support, but just like talking to you on the live cattle, until you lose the embedded reading, I think the bulls have now really taken the bull by the horn. I know it's meat, but what can I say? In the hog market, will we see more exports? This whole thing with African swine fever is all over the place. Pretty serious resistance at 71.75 to 71.50. That's where I think pros would take something off the table. Are we trending? No. You have an upside bias, you're overbought, and you have a higher high, lower low. If you want to be on top of the markets tomorrow morning, especially tomorrow, we're about to get conferences now between Nancy Pelosi, what is she going to do in terms of impeachment inquiry? This could be, as I said, where both the Democrats and the president throw all their chips on the table. The president has said he didn't do anything wrong, and what's going to happen is he is going to release the unredacted transcript of his conversation with the Ukrainian president. If there is nothing there wrong, what does it do to the Democratic story? What do we all think? If the president is wrong, and he did, so to speak, hold over this $400 million in cash for help to the Ukraine and use it in politics, is that his presidency? I don't know. I don't know what it all says. But I'm going to cover all these markets. I will have this recording begun typically before 6 a.m. Central Daylight Time. And I will be talking what Asia thinks, what Europe thinks, what we know through tonight and when I wake up in the morning. And of course, then tomorrow's the explosion time. The sadness of all this is it's while the UN is taking place in this meeting and we look so unbelievably bad. In any case, to view this video, it's a subscription basis, 26.5 cents a day. I think if you haven't tried it, it's not going to break the piggy bank. It's up to you. But after that, if you decide to stay with it, it's $30 every 15 days. Or on our website, you'll even see now, you can switch over to 1-year subscriptions and away you go. Not a hard thing to do. You can either go to our website under the word, I believe it's now research. Well, there's research and education. We just changed it today. So go to the top there and you'll see it. And pull down menu, you'll see where that's at. Or you can click up here, it'll take you. I wish I knew more. We put this up 5 minutes ago and I'm just not hip to it yet. I will have it understood by the next video I do this afternoon. In any case, I'm Ira Epstein. You have a good day.